Wow, what a weekend. Today we'll cover which stablecoin is now safe, if any. BUSD, USDP, USDC, USDT, then I'll make a prediction. Yes, prediction of what I think the impact of this episode will be on the whole crypto industry, because I see many have the same conclusion. And I think it's correct. Then we'll look at what this means for Bitcoin price. Stablecoins first. I spent a lot of time on it actually. 8 months ago I published this video, is USDC the next UST? And this one, I sold all my USDC. I saw someone wrote that it didn't age well because I said I sold it to BUSD at that time. But I don't think that's true. I don't think anyone has lost money on BUSD. This is still 1.00 here. And I did change it to USDC when BUSD got shot down. Now, the issue I highlighted there was the matter of bankruptcy remote, meaning if say Circle the company or Tether the company or Paxos the company goes bankrupt, what happens with the customer deposits? That's what happened with FTX and BlockFi and Celsius and Voyager and Gemini and so on. And the conclusion in all those cases was that your deposit isn't your money, it's the bankrupt company's money. So that's still relevant. But that is not what happened this time, this weekend. Because frankly, even when I tried being the most pessimistic, putting my blackest hat on, my darkest perspective to really minimize risk, I still didn't guess that 3 different US mainstream banks would lose all the deposits. Now we got lucky and Treasury Secretary Yellen bailed us out. If she and her colleagues had woken up on the wrong side of the bed yesterday, USDC might have been smoked here. If they hadn't come to the rescue, there would have been an absolute bank run with USDC redemptions today. Circle would have struggled with liquidity and maybe would have needed to pause redemptions, which would have caused even more panic, more run on the bank, people willing to sell USDC at lower and lower prices on the open market. Now, we didn't get that fortunately, but I did not like this. I think the key question to safeguard against this event is this one: private deposit insurance in excess of the cash balance. This is Paxos writing. Seeking private deposit insurance is part of our conservative approach to managing customer assets exceeding FDIC insurance limits. I tried to find if Circle has this for USDC. I couldn't find it, and I'm sure it's just my failure to locate the information. Not subject to deposit insurance protection, but I think that just clarifies that the FDIC protection doesn't apply to you individually. I asked Circle and Jeremy Allaire today, who has been kind enough to reply in the past, but I'm sure they're extremely busy today, so I won't be upset if there is no answer this time. And for clarity, I'm not criticizing anyone. I have full respect for how difficult it must be to operate something like this, and I'm very grateful that this seems all sorted out for now. But this was scary, and I don't like it. First, BUSD, which as far as I can understand had tick in all the boxes, gets violently shut down by regulators. For some reason I still don't quite understand. Perhaps it's because they had Binance in the name, and they think Binance is Chinese because Canadian CZ looks Chinese, or they have stocks in Coinbase, so they go after the main competitor. I have no idea why that issue applied to BUSD, but not for example USDP or USDC. Then USDC, which was really launched as a gold standard project for a safe and secure stablecoin, lost its peg by 12% and really was an inch from totally crashing this weekend. Then we have USDT. If this was USDC, this is really USDT. I think they only escaped a depeg this weekend because we don't actually know where the money is held. This article is from 2021, but I think it was exactly the situations that we had this weekend that Tether didn't want to deal with in public. Tether and Bitfinex petitioned the Supreme Court to block CoinDesk and other organizations from receiving documents detailing the composition of Tether's reserves. They probably wanted to sort out issues like this behind the scenes. The problem with that is what we saw in all those bankrupt companies, that everything seems hunky-dory until one day and it's gone. But what actually happened with these banks that caused the issue? I'll show you exactly. And for that, we have to rewatch the full original meme.
Stan, now more than ever, you need to understand the importance of saving money.
But Grandma said I could use this money to buy whatever I want.
Okay, next please. Go on, Stanley. How can I help you, young man?
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well, what can I do to get back
I'm sorry, sir, but this line is for bank members only.
I just opened an account.
Do you have any money invested with this bank?
No, you just lost it all.
Then please stand aside for people who actually have money with us. Next, please.
Hey!
Hello, Mrs. Farnickel. How are you today? Making a deposit, are we? Great. We can just put that into your retirement account and make it go to work for you, and it's gone.
What?
Sorry, yeah, that's gone. Please step aside for people who actually have money with the bank. Next, please.
Dad!
Hey, I'm trying to teach my son the importance of savings. You already lost his money? Oh, Mr. Marsh, don't worry. We can just transfer money from your account into a portfolio with your son, and it's gone! This line is for people who have money with the bank only. Please step aside.
So what these banks have done is that they have taken customer deposits and then speculated with them and lost the money. But hey, you say, isn't that what FTX and Alameda Research did? And then Sam got arrested and thrown in that rough Bahamas jail. Why are all these bankers still out? Because it's completely legal for the bank to take people's money and then go speculate with them on the market and lose it all and come back and say, well, you know. So in this particular instance, what did, for example, Silicon Valley Bank do? They took customer deposits from different startup companies and used them to buy bonds. A bond means fixed interest is paid. They bet that the Fed will increase interest rates slowly so that those fixed interest bonds they had bought will be good, but Fed increased fast. Then those bonds lose value. Who wants a bond yielding 1.5% when the market is now selling bonds yielding 5%? The answer is no one. So the capital they have drop in value. And they have to pay out more money because interest rate is higher, while they're not getting any more interest on the money they have. It's not a loss until you sell, right? That's what beginners often say. Well, a bank run happened because people started shouting fire in the hall, and people ran to withdraw money. Then the bank has to start selling stuff, turning those from unrealized losses into realized losses. And then got real. So now it's over then. Well, there's a lot of unrealized losses in the bank system left. This time it was a couple of banks: Silicon Valley Bank, Silvergate Bank, Signature Bank. And note here that as far as we know, all the main stablecoin issuers are much better than the banks here. Paxos and Circle hasn't speculated with the customers' deposits, as far as we know. Still, the regulators say crypto bad, banks good. I don't know, guys, if you look at this neutrally, isn't it the other way around? There is this Twitter account here called All Banks Are Insolvent, highlighting that JP Morgan has $3.3 trillion in liabilities and $28 billion in cash. If everyone started withdrawing at the same time in the trillions, with that much money they would need to start selling stuff, causing a price drawdown and start realizing losses. It's either that or freeze withdrawals, adding to the panic. So even if the Fed came in and bailed everyone out this time, and made some strong assurances that they will continue to do so, I think a lot of people, myself included, felt a sting of fear this weekend. How fragile the whole banking system really is, and that we basically depend on some specific person to wake up in a good mood that day. Clearly, no stablecoin is 100% safe and stable here, no matter what they do on the crypto side, because they rely on banks, which are not stable in themselves. I think the only real mitigation right now is diversification. So whatever bomb explodes tomorrow, we still live another day. So no, I don't think anything is completely safe. But what is the impact from here? What is the impact from this near-death experience on the crypto industry? I think the conclusion is exactly what Bitcoin started with. The Times, 3rd of January 2009. Chancellor on brink of second bailout for banks. The laws of the land just doesn't support the stablecoin. There is work to create those laws. Jeremy writes about it here. The Payment Stablecoin Act. But that's an active pursuit that would enshrine in law. And Deb, the super expert lawyer who I interviewed in this video, also talked about the laws missing for protecting depositors into a centralized exchange. That includes the ones that have gone bankrupt, like FTX, BlockFi, Celsius, Voyager, Gemini, Mt. Gox, and the ones that we still love because they haven't gone bankrupt, like Coinbase, Kraken, Binance, but the same issues apply to them in case there is an issue in the future. And while Binance added TUSD and said they will add more stablecoins, given the changes in stablecoins and banks, Binance will convert the remaining $1 billion Industry Recovery Initiative funds from BUSD to native crypto, including BTC, BNB, and ETH. So CZ apparently came to the same conclusion, that there really isn't a solution if relying on the traditional banking system. Ivan on Tech, now running the Morales Web3 programming framework, who I'll by the way meet on Wednesday here in the office, came to the same conclusion. This weekend was a friendly wake-up call. We can't cut corners, we can't compromise decentralization, we can't rely on stablecoins, and we still have this Operation Choke Point, which isn't just a meme. This is on White & Case website. A new Operation Choke Point, the quickly changing rules on crypto activities for member banks. This is a long article. Banks are likely prohibited, for the time being, from engaging in crypto asset activities in an open, public and/or decentralized networks, as opposed to those networks that are closed, permissioned and centralized. Agencies have shown a clear aversion to permitting banks to engage in such open, public and decentralized network. Open and public, yeah, very bad. So what I think will happen is that crypto will decouple more from the old banking and monetary system. I think it will be harder to get money in and out of crypto. And then once it's in crypto, I think we in the end won't have to be as reliant on this model where stable coins are being minted and burned together with bank deposits on a traditional bank. That's a stopgap solution. But since probably 5 years back, I've said very publicly, I think we will end up with a technical solution to the problem of storing stable value in the crypto ecosystem, not a bank-based one. If Bitcoin can hold value based on math and game theory alone, but be volatile, why can't we have stable value based on the same principles of code, math and game theory? I believe we just haven't solved it yet. Remember that XHV came up with the first idea for that in January 2018. Then Luna took that idea also in January 2018 and ran with that idea up to $20 billion market cap stablecoin. Then they improved on the idea with this BTC collateral, which opened them up for another game theory attack, which then crashed the whole thing to zero. XHV has also struggled almost every year of those 5 years with game theory problems, hacks, whale manipulation and every other problem under the sun. Today in 2023, they're at version 3.0 with the game theory and trying to recover the system, but the peg hasn't stabilized back to $1 yet. Whenever I mention a specific project, half the audience here stop listening to what I'm actually saying because they get angry, either because they bought it and it went down, or they didn't buy it and it went up, or because they're a fan of a competing project. So this time, I ask you all to please listen to what I'm actually saying next. I think that a project like XHV will eventually succeed with the same basic idea to create a value-stable solution based on code, just like Bitcoin, not based on deposits. Bitcoin's value doesn't stem from depositing gold bars in a vault. If you haven't worked to create some tech yourself, you probably don't appreciate how many failed attempts it usually takes for anything to succeed. The devil is in the detail, in the execution. Almost all projects fail. That doesn't mean the idea can't work. Edison and his associates worked on at least 3,000 different theories to develop an efficient incandescent lamp. I think we will end up with a native crypto solution for value stability. It might take 3,000 failed attempts, but I think we will get there eventually. That is my prediction. For now, there are a few projects out there. I'm not sure I would bank my financial future on any single one of them. There is also the solution to only hold Bitcoin and then short it. The classical solution to this was to hold BTC and then short it 1x. If you wanted to preserve the USD value, and you could have all your crypto money in Bitcoin and then, for example, take 20% of that and short Bitcoin 5x. If you do that, you have the same USD value regardless if Bitcoin price goes up or down. Approximately, it's a simplification. What you don't cover for is if there are violent price movements. You can get liquidated on a wick. And even if Bitcoin continues climbing up in a slow and steady manner, those 20% will get liquidated and you would need to replace them with another 20% from the remaining BTC stash, meaning you get less and less BTC but hold the same USD value. Recognize that right now, if you want to stay in the crypto ecosystem, you need to spread the risk if you want to ensure that not everything is gone one rainy morning when you wake up. Or you take the money out of the crypto ecosystem into fiat, and one of the largest banks like JP Morgan, which the Fed perhaps is less likely to let slide to zero. But who knows even with that. Now, let's move to happier topics. Let's look at Bitcoin price because it looks great. And this recovery here since last Friday is probably driven exactly by this conclusion I highlighted here. It feels like there's only one safe harbor right now, and that is Bitcoin. Exactly like Bitcoin started with. And I think many people got reminded of that these past few days. Price reclaimed this support level. Large Online remains gold. As I've said many times, Large Online golds means in dip buying mode. And this means we are still on track for that scenario I've talked about for probably 10 videos now. Left shoulder, head, and this could qualify as the right shoulder if we go up from here. Of course, we don't know yet if that will happen until it confirms. A pattern isn't a pattern until it has confirmed. And for an inverse head and shoulder, the confirmation is a break above the neckline. But if something like this or some variant of it plays out, I'm just painting scenarios here, but if that does happen, this will be another high risk-reward entry with a clear invalidation level. Very nice. So I think we're really well positioned with our entries here. We got a nice dip now. If this does happen, there will come another one here. From a trading perspective, I'm very happy with the analysis I've shared with you here on the channel. From a stability perspective of the whole crypto ecosystem, I'm not happy. The risk is definitely super high. For the course and Large Online access, I've increased the price in BTC a little, as I said I would last Friday, but I didn't have to raise it as much as I thought, thanks to this nice recovery in BTC price. So now it's 0.128, which is roughly $2,816, so still a little less than the fiat price. To get it, you go to ctolarson.com, not to a scam site, please. And it's finally time for Fan of the Day. Rafa Lee. It's my first cycle. Now I can see why so many people quit. It does hurt, but I'm not selling. I'm saving money since this rally started. If we get back to previous lows, I will be buying more. First thing I will buy after the bull run is not a Lambo, it's your course. Thank you, Rafa, and it's cheaper too. I do try to respect copyright. For the South Park episode, YouTube writes like this. The owner allows the content to be used, but you can't monetize your video, which I don't care about anyway. So hopefully correct. Thank you, tack. CTO Larson out. Hej då.